Hey everyone, I'm Matt Pappas, and welcome to this episode of Pocket Pundits. We're glad you're joining us today, whether you're in the office, at home, or on the go. We've got a great episode lined up for you. Now, our discussion today is on a topic that's been top of mind for many of you, especially in recent years: real estate investing. It's no secret that real estate can be a powerful way to build wealth, but as with any investment, having the right guidance is absolutely crucial. If you're listening today, you're likely aware that the real estate landscape has changed quite a bit. No longer the predictable market that it was even just a few years ago. So what's driving the shift? Well, for starters, we've seen economic uncertainty, interest rate hikes, and evolving demographics all coming into play. This combination of factors has created a real estate market that's undeniably more complex than it was just a few years ago. Now, I don't need to tell any of you that navigating these waters is not easy. A lot of investors, understandably, have become more cautious about acquiring new properties or expanding their portfolios. The rising cost of financing combined with all this market uncertainty gets left many wondering where to turn next. Now, here at Cottonwood Wealth Strategies, we specialize in helping clients navigate these complexities. We take into account a range of factors, including market trends, risk tolerance, and long-term financial goals to help you make the best decisions for your unique situation. It's not just about finding the next top property. It's about aligning your investments with your broader strategy, your goals for the future, and your comfort level with risk. So whether you're a first-time investor or you're looking to diversify your portfolio, having a trusted advisor and a real estate expert in your corner can really make a difference. A good advisor helps you see the full picture, weigh the risks, and make informed decisions that truly support your financial future. And speaking of trusted advisors, I'm really excited about the guest we have joining us today on Pocket Pundits. He and I met first through a mutual friend in the investment world while we were together in Texas, and I will tell you, after a few great conversations, I knew his expertise would be an asset to any investor considering multifamily real estate. Our guest today is Dave Marcinkowski. He's a partner at Madera Residential, a tech-enabled real estate investment company based in Lubbock, Texas, that has been making waves in the multifamily space. Dave was recently recognized as Ernst & Young Entrepreneur of the Year, and I'm thrilled to have him here with us. Dave, thanks so much for joining.
Thanks, Matt. Thanks for having me, buddy.
Great. So Dave, let's jump right in. On today's episode, we're diving deep into multifamily real estate from the investment standpoint. We'll talk about where we are in the current real estate cycle, and more importantly, we'll look ahead at what we can expect to see in the next 1 to 3 years. Now, with all the uncertainties in the market, interest rates, inflation concerns, and shifts in demand, understanding what lies ahead is crucial. But before we dive into all of that, we'll also have some Q&A session coming up towards the end of the episode. We've received some great questions from our listeners, and we'll be sure to get to as many of those as possible within the time that we have. Now, Dave, after meeting you and getting to know you more about you and your team and what you do, I came to realize just how much of an asset Madera Residential would be to any investor in that multifamily real estate market. Your approach is both innovative and practical with what I would call a true fundamental basis, which is exactly what many investors need right now. So for our listeners who may not be as familiar with you, let's take a step back. Could you share with us a little bit about your background, how you got started in the real estate space, and tell us a little bit about Madera Residential and what you guys do?
Yeah, thanks, Matt. So I've been in multifamily real estate right out of college in 1982. Actually, kind of a unique story, kind of fell backwards into it and got a job at the very bottom. I was a bookkeeper for a family shop out of Detroit called Ed Rose & Sons, and was able to work my way up to being the head of accounting for a group in a couple of years, but realized that my last name wasn't Rose, so I wasn't going to go very far, and took it as director of training for a company called Marquette Management out of Chicago. So I moved to Chicago, and I spent the next decade, just shy of a decade, really working up the ladder and really always focused on the operations side of things. My wife, who's from Lubbock, Texas, got to move down here, meet my current partners, and we founded what is today is Madera Residential in 2004. We thought this fee operator. So again, operations, running apartments, managing apartments for other people. Realized though, what we wanted to do was really raise equity, work with groups like yours, and find great deals in the Texas market for us today. And we've grown our first deal in the summer of 2008. So we have a little over 11,000 apartment units today. We're in development or lease up of another 4,000 apartment units. And so we're kind of a full service platform for multifamily. We're the find it, underwrite it, buy it, raise the equity for it, run it, execute the plan, sell it. We're unique in that we're also operators of the properties. A lot of groups, are find the deals and they get someone else to operate it. I don't think there's anybody better to run your deals than you. So I think that's been a part of our secret sauce. And we've been really blessed, man. We've had a great run. It's allowed us to really yell and look into the future. We see some incredible opportunities for us to really take this to a whole different level.
Wow, that's exciting. Really shows the results that you've been able to achieve, and you're not just, like you said, you're not just investing in properties. You're investing in the future of multifamily real estate, making it more efficient, more sustainable, and more kind of aligned for what the market demands. Thank you for sharing with us a little bit about your background as well. So let's kind of get to the meat of the conversation. Today we're in a pretty unique place, right? In the real estate cycle, the market has shifted over the last year, and many investors are kind of looking at it, trying to figure out, what's the next few years going to look like. So Dave, I'm curious from your perspective, where do you think we are in this current cycle, and how should investors be thinking about positioning themselves going forward?
Yeah, let's take a step back to like COVID. So COVID hits, and I think we all thought the world was awful. But we, from a multifamily shop, we didn't know what was going to happen, and interest rates got cut to essentially nothing, and so a lot of money got flooded into the markets. You saw a lot of deal transactions in 2021 and 22 because money was so cheap. The other thing you saw was the largest new starts of multifamily apartments. So you had all these developers who started building apartments. And it takes about 2.5 years for those units to hit the market, which means in 23 and 24 have been the largest deliverable of apartments in the market. And 24 this year was the most we've seen as far as apartment deliverables, which means you have more supply. And so what's happened is 23 and 24, large supply years, interest rates, we had the massive surge in interest rates, the largest in my lifetime of interest rates, which for a real estate guy is not good. So 23 and 24 have been quite awful, to be honest with you. It's just not been fun. This is the time where you just kind of, you grit your teeth, you roll up your sleeves, and you get to work and you manage what you happens. If you're selling deals and buying deals right now, you got a problem. Like, this isn't the time to do it. Good news is our industry is cyclical, which means that we have our ebbs and flows. We just got out of like 15 years of really good times until 23. And then we have our 2 down years. And we're at the back end of the second one. We have a new administration coming in. September, we started to see rates come down. We still have some hurdles to jump through, but we're so optimistic that sometime in 25, I'd like to say the summer of 25, I think I have a partner who would probably say sooner. I have a partner who would probably say a little bit later, but sometime in 25, the market's going to shift back and you're going to see the good times begin to happen again in multifamily real estate. What does the good times mean? It means you're going to see those groups that have been struggling to get by finally get to a point where they can pencil out a sale. They're probably not going to be doing great, maybe be losing some money, but willing to sell that asset at a good price. And there's some people out there, I'm a value add guy, who probably really struggled and they've like let their properties fall by the wayside. And so a group like mine would look at it and go, okay, we can buy it cheap, we can fix it up, we can create value, and then we can go and sell the deal down the road and make up that value plus some with the way the economy works out. So if I'm somebody listening to this podcast, would strongly encourage them, if they don't already, to put multifamily real estate and other real estate assets, but multifamily in particular, on your watch list, because I think there's going to be some really great opportunities starting here in the very short term. And I think that run will last, years. There's a lot of things to like about a real estate investment to begin with, but I think the market has shifted in a way that's going to make it even more exciting for us.
Yeah, that's really interesting. And one thing you mentioned in terms of the real estate cycle and kind of that you think you and your team see that cycle shifting. Longer term, what do you see driving that potential or opportunity in the real estate sector? Is it demographic trends? Is it changes in the economy? What are you seeing in that regard?
Yeah, I mean, that's all great. So, I'm a Texas guy. The migration of people to Texas from all over the country is massive. And so Texas real estate, and I would say Sunbelt real estate is especially exciting because, the more people that come in the market, simple supply and demand. Once the supply is limited, then price rent up. And we went through a period of time where we were seeing double-digit rent increases year over year on rents. And some people will read that and be like, well, housing isn't affordable. You guys are the problem. Well, no, the problem is we don't have enough housing. And, that we should be doing more to be able to drive more development and to be able to make it easier to have apartments and manage apartments. But the reality of it is that it's coming. Once rates went up, all new development stopped. And we're going to see 26 and 27. There's just not going to be a lot of new deals coming on the market, which means supply is going to be low, demand will be high, and rents will go up. And that's a great time to be looking to sell some assets. So buying in 25, 26, and being able to sell, building like we have in 23, 24, and 25, those deals are going to be ready at we think a great time to be able to sell when the market turns. I've been through this now, these down cycles 4 times, Matt. They last typically 2 to 3 years. We're kind of at 2.5 years of this cycle. And, they when we come out of them, there's always real estate has always been something that is a love of institutional investors and really any kind of investor, but they know not to put their money in, but they've all got there's a ton of money sitting in the sidelines waiting to get into it, which again will drive the cap rate down, which is what you value in real estate. People will there's more people in the market trying to buy them, so they're going to bid against each other. You're going to see those prices go up. And so we think you're going to see this flood of transactions start to happen here as we move 25, 26, and 27. And typically what happens, and you're starting to see it with some of the institutional groups, making some bigger buys. You get FOMO. Other groups are like, man, if they're doing it, I need to be doing it. And so you're going to see a lot of other large groups diving back into the market, into our space. You're going to see a lot of, the great thing about real estate is there are assets out there that, anybody can buy. We kind of gone through that. You don't have to be a large, sophisticated investor. I'd say if you're looking to do it, you need a great operator to go alongside of you. But, I know a lot of friends of mine who have nothing to do with real estate, who look at real estate as their best investment, whether that's being a single family rental that they can lease out and manage themselves, or buying small apartment communities. Or if you get to the point where you can either pull a group together or on your own buy a bigger apartment community, we don't discriminate based off of who invests. So anybody like myself who had no experience in real estate is now a 30-year veteran. I didn't have to go to school and get an MBA and do all these crazy things. Anybody truly can do it.
Yeah, that's really great. One, from the standpoint of the markets and the cycle, it almost sounds like you have a bit of a contrarian view, or maybe it's, by nature, investors typically wait too long or get too caught up in the fact that we don't understand it. We don't understand where it's going. And I think what you're saying, Dave, is that, now's the time to actually be proactive and look at the market, look to make some smart investments with that fundamental bias that you have.
Yeah, that's really important because we'll go through these windows of time where the best opportunities are at. And the best opportunities will be on the finesse. There are a lot of groups out there who, take Madera, for example. We should be selling 10 to 15 properties a year. We haven't sold a deal in 2 years because it just doesn't make sense in today's environment. And so you've got a lot of groups out there with deals that they want to sell. And, some of them are, maybe not doing as well as they hoped, or they're burdens for them. And so they're looking to get them off their books, but they're waiting, as soon as the sun comes out, where they can see interest rates coming down enough, where they can see enough buyers in the market, they're going to be probably more apt to want to sell. And so, yeah, if I'm an investor interested in real estate, I'm not waiting for 26 and 27 to make those buys. The window will be closed and you're going to be competing with everybody else. I'm looking to make those buys in 25. When it first starts to come out, as those rates start to inch down, I'm looking to have the relationships I need or in the market enough to find the deals that I am, where I'm able to buy it at the lowest point possible, so that I can go then create the value that I need, be able to increase that value, and then ideally sell it somewhere down the road and be able to really capture that value.
So it sounds like, from an interest rate standpoint, it sounds like you're saying we don't necessarily need to get back to where we were a few years ago.
Yeah.
Just somewhat of a drop in rates could, you think, spur opportunity?
Yeah, I'll just tell you my own personal opinion is we don't need free money. Like that leads to some of the issues we're having right now. I mean, everybody wants to get into it. Everybody dives into it. And then you end up in this situation where you have people who probably aren't experienced enough to be able to play in the space. And there's some people who are really hurting right now. Those are opportunities for buyers here that are coming up. On the flip side, my recommendation or my feeling is when rates get around when the 10-year treasury gets to about 3.5, that's going to be where you're going to see this flood start to occur. We had it like in September, we had that half-point rate 10-year drop down to like 3.6 for like 72 hours. Today, I think it's sitting right around 4.4. I'm actually looking at it on my screen right now. 4.4 doesn't work for us. 5 doesn't work for us. 3.5 though, that's when I think you're going to really start to see it. If we can even get it closer to 3 on the 10-year tree, man, I think I'll tell you, my life will be really good, and I think we'll be really excited about the future.
Yeah, very interesting. Very true. Well, Dave, that's a really fantastic overview of kind of where things are. And again, as I mentioned earlier, I think that contrarian view, that proactive view is really important, especially right now, right? With people sitting on the sidelines, kind of wondering, what should I be doing? What you're saying is now's the time to look. Now's the time to be proactive, looking for attractive assets that make sense in the portfolio. And we certainly echo that approach, with what we do is, it's always difficult, right, to kind of take that stand that's outside of the norm, but in a lot of cases, it's the right one, and especially from an investment standpoint.
Yeah, I mean, Matt, that's what's been great about getting to know you over the last year. You and I, we have these conversations, and you represent, a lot of different plans. Like you're sitting there and, hearing from me and hearing from other people so that you can time it right. You can be ready to go when the market shifts to the point. I think, unfortunately, too many people they just wait too long, and they don't want to dive into the market because there's a lot of things that you just don't know unless you're with somebody like yourself or like me that does that experience. And so I think the timing of this podcast couldn't be better.
Yeah, I couldn't agree more. Well, before we jump into Q&A, I just want to say, Dave, I'm so grateful for you to join us on Pocket Pundits today, share your expertise. I think this has been a really insightful conversation, and I know our listeners are going to learn a lot from this. So I want to make sure we get to as many questions as we can in the Q&A portion of the show. So let's kick it off. I think this is a good one here. Let's kick it off with this one. Can you tell me more? You mentioned tech-enabled real estate, Dave. Can you tell me more about what is tech-enabled real estate? What does that mean?
Yeah. So the real estate industry has always been, in my 30 plus years of doing it, this is how we've always done it type of group. And this is how we've done it has been more about, run the permits right, keep them occupied, keep rent growth, do these things, but there's been no real focus on technology. And because of that, our industry has been real reluctant to adopt technology. And as anybody who's listened to this knows, the onset of AI and a number of other things like crypto and blockchain and different things, like technology is accelerating at a pace we've never seen. And you follow Moore's law, it's doubling every 2 years, which means it's only going to keep going at exponential speed. And so what do? You got this kind of conflict going. You got real estate people who are kind of emboldened to, just run the property right and everything's going to work out. But then there's all this opportunity on the technology side. The great thing about one thing I'm proud of my partners is letting me kind of play in that space. And we founded a company called Quex, a technology company specific for solutions in multifamily. We have a smart apartment solution. So we have like a thermostat hub that controls locks and lights, and we put sensors in everything. And with sensors comes data. It allows us to be more efficient. Like digital locks away from a key lock. We don't have to, there's all kinds of efficiencies there. There's revenue drivers that we can do by working with local vendors and how they do deliveries and different things. We create solutions that as an operator, I know I need, that's going to create value for me. It's going to make my apartment community worth more. At the same time, these are solutions that apply to the whole industry. And so we use Madeira as the sandbox, and we create technology solutions. We partner. I can tell you about, we've got a great partnership and investment into a revenue management company. We've got one into that does leak detection and water monitoring. We're big into bringing high-speed internet and stuff to the apartment world. So we're trying to solve problems, make our real estate better. Same time, we're creating a business enterprise that ties in with that makes us even more vertically integrated to really create this platform play that we call a tech-enabled multifamily real estate company.
Yeah, that's really exciting. And, typically, right, you see companies that are kind of on one side or the other. They're either solely tech focused or they're, solely what's called traditional or real estate focused. But Madera seems like, you've kind of adopted both approaches. So taking the fundamentals that you've learned on the real estate side of things and saying, how can we improve what's coming next down the road without losing that fundamental focus, which I think is very, very unique in this space.
A lot of the technology that's been built for real estate companies has been built by technology people. They know the technology, but they don't know the other side, the real estate side. They don't know what our on-site people, what our residents are looking for, what they need. They don't really have a hotline to those two groups to be able to really know how to enhance their product and make it something that really works. And so we end up with these solutions that have cool ideas and cool names, and they do something good, but they don't really look at it to really solve the real problem. The great thing about having this combination of the real estate and the technology company working together is you have that feedback loop that we're able to really, okay, is this really helping you? If not, let's make it what it is. And then you look at today's, I'm sitting here saying something like revenue management. And if anybody is sophisticated on this thing, they're going to go, yeah, but there's all these lawsuits. The DOJ is suing this company for this and doing these things, but what I understand is like, we were able to see what the future was coming with that. We were able to build the tech to avoid those issues that caused those lawsuits to happen. So we have an alternative solution that works, that we're super excited about. Then people are like, well, high-speed internet, and can you really do that? The FCC has got these rules that could be happening that they're going to try to limit, the ability for a property owner like myself to provide high-speed internet to their residents because we're stymieing competition. And what, as an apartment, I was former Texas Apartment Association president. I've got some senior leadership roles at the National Apartment Association. Well, we've been able to go to the legislature, both at the national level, still, and meet with these groups and say, listen, I can create a high-speed internet network for my multifamily property, and I can do it for $20 per unit per month. And I can charge something, at a much lower point, like a lot of times less than half of what our residents are paying. This is an environment where we're seeing inflation skyrocket. We're creating a solution that literally cuts an expense that I would say is a must-have. This is a utility internet. Everybody's got to have it. And we can drive that price point down so low that and make that a part of their rent or something that they add to their rent. We're saving our residents hundreds of dollars every month on their internet costs. Like, that's the kind of solution that we need. And I don't think that comes from just a technologist. You need that real estate person who's connected with those residents, who can hear that feedback and say, man, I got so many expenses that I pay every month. How can you as an apartment owner help me go beyond just giving me shelter and a place to live? And we can do things with our bulk and our size, drive down costs. We can make it easier for deliveries, and we can work with local vendors to be able to offer special deals to, we can buy in bulk and share back with it. I think you're seeing this shift from housing being shelter and a place where people live to housing being a lifestyle and how people live. And I think my industry is really leaning into that and trying to figure out those solutions to really help people out. It's and as an investor, if you're sitting there listening to this, it's no longer can my real estate appreciate. What other revenue streams can I bring to my apartment community? And I think it takes groups like ours, and there are others like us, who are looking at it holistically like that, who can layer in all these ancillary items to just regular real estate, which create amazing value that we can then go capture and sell to the next person who's interested in our real estate.
Yeah, that's exciting. Shifting gears a little bit, we did get a question on when we mentioned crypto, digital assets. So, real estate has always been one of the best ways to build generational wealth, right? Looking at it today, we've got things like crypto, Bitcoin, new technologies, digital assets, decentralized finance, the list goes on and on, right? So in that world, Dave, how do you see real estate? Do you think it can continue to be that area of building generational wealth, or do you think that's going to be different?
I want to answer this in two different ways. Let's talk about the whole blockchain piece first. blockchain, there's no better for smart contracts than real estate. You talk about title insurance and things like that. But I'm seeing, and I'm actually advising a group right now that is fractionalizing real estate. So like if you're an investor in Madeira, you want to come and invest, our minimums tend to be like $100,000 to get in and invest in a real estate deal. Not everybody has $100,000. There are groups out there that are looking at fractionalizing that out and creating a marketplace for real estate. So can you imagine you're living in your apartment community and you only got $50 and you want to buy $50 worth of shares in the real estate that you're living in because you think it's run really well and it looks good. And there's a marketplace out there where I can turn around and sell my $50 for maybe $75 in 6 months. Like that technology and that democratization of real estate investment is happening. It'll probably be 2 to 3 years from now before you're going to see something that you can have another podcast and you can share with your listeners what that looks like. But the groups that I'm affiliated with, they've actually taken the floor of the Maui Invitational and they've turned it into fractional real estate, and they're actually selling pieces of it to different groups. And I know it boggles the mind, but I think it's really critical for your investor to understand like technology is seeping into everything that we're doing, and in a fertile world like real estate that has no technology, these are massive opportunities for us. Now, take a step back to your next question, generational wealth in real estate. What makes real estate so attractive? Well, here's what I can tell you. There is no year cycle in our history where any real estate class did not appreciate. So we have ebbs and flows. The last 2 years have been really bad. The value of our real estate has gone down. But the great thing is we just don't sell it. It doesn't matter. It's just on paper that it went down. In 2 years from now or 12 months from now, the market's going to change. And then that value is going to go right back up, and it's going to be worth what we told our investors we said it would be worth. It's just like during the process, it didn't feel good, but we're going to get to where we need to go. And so if you're an investor, the cool thing is if you can afford to, you just sit in the sidelines, let your real estate kind of work through the storms, and then you can sell it when the market's right. That's what makes it so attractive. It maybe is a little harder to do with other investment classes. The other thing about real estate is it's a tangible asset. My investors love to drive through. They go to Dallas. They're from Lubbock, let's say, to Dallas. They see one of our assets. We have some of the nicest assets in the DFW market or Houston market. They love to kind of go in and say, hey, manager, I'm one of your investors. I know Dave, he told me I could just stop by. Can I see a whole unit? It's cool to be able to do that. It's a different feel than watching maybe a stock quote per down. And then finally, the tax advantages of real estate. Depreciation is a real thing. As real estate depreciates, you can get some really strong tax advantages. It's a capital gain, so you can stay within the capital gains on a sale side of things. It isn't, so there are benefits there on the tech side that really kind of like make that investment that much more worth your while.
Yeah, I think that's great. And one thing you mentioned on the cycle side of things, there's a benefit to not selling too early, right? Not, I want to say not having the option to sell too early, but if we, what one kind of way we look at things like real estate is we put them into silos from a time standpoint. So knowing based on the client's financial situation and what their goals are, we kind of silo the real estate investments for say a 5 or 7 or 10 year time horizon, maybe longer in some cases. To your point, Dave, it's some investors come to us and say, well, that's an illiquid asset. Isn't that risky? And in some cases, yes, right? That can be more risk for having something that you can't turn around and sell tomorrow on the NASDAQ stock exchange. But to your point, I think that highlights the benefit of the illiquidity, right? There's the other side of that coin, which says, there's a benefit to not having the easy access to turn around and sell that thing tomorrow, but because you probably should, it doesn't make sense for you. It's outside of that time bucket within your financial plan. So I'm glad you mentioned that. And I think that's really key that investors sometimes overlook.
Can I add to that? Because I think it's really important. So because real estate can look a lot of different ways. First of all, if you're an investor listening to this and you're having a sale of another real estate asset, you can do what's called a 1031 exchange and basically forego your real estate taxes and move it into another real estate investment. If there's opportunity zones out there. So if you, like Matt, if you know somebody who's doing opportunity zones, you can pretty much 1031 anything into an opportunity zone, and there's other tax benefits. And if you hold the asset a certain period of time, so like knowing that asset class and knowing if that fits your investment criteria trying to do it, like we were value add guys solely for the first say 10 years of our existence, meaning like we would look for assets that were undercapitalized. Apartments are like rental cars; they get beat up, and so you got to constantly be reinvesting into your apartments. Appliances, like big things, roofs get disrepaired, like landscaping needs to be updated, like everything needs to be kind of maintained. That's why it's so important to have an operator. But if you find a deal that like literally it's in a good market, but it's not been run very well, that you're going to probably be able to buy it very inexpensively. And then the great thing is if you come in and you do all the things that are necessary, you bring it up to where it should be, you can then go back up to the market in a very short time. I mean, we have cases in our scenario in less than a year, we've been able to fix an apartment up and sell it and do extremely well. But typically it's within 2 to 3 years. Like now it's like, okay, I want to be an investment that I get my money out in 3 years or less. Then you look for the value add side of things. But then if you're like, I just want to put my money into an asset that's that's going up, my rents are going. The great thing about real estate, you can put it into the right asset, and then every quarter you're getting a check, and that's how your money is going to be viewed. So having a group like yours that can like look at investors' needs and what their desires are and connect them with groups like ours that can offer whatever meets that need, I think is so critical.
No, I couldn't agree more. And I think it's, from our standpoint, we see the value in real estate as advisors, from the market standpoint, the returns, all the things we talked about today, right? But there's, in a lot of cases, we find, there's just a gap between what a company like Madeira is doing in a very specific market that a lot of expertise in, and what the investors kind of understand about it, because it's not what they do. So we try and bridge that gap as much as we can. And a lot of it's educational, right? As you well know, it's educating on what the asset is, why it makes sense, and then for us, where does it fit in the mix? Where does it make sense for you and your overall plan and your state strategy and so forth? Because there's obviously a lot of value in having the multifamily real estate piece in there with a team like Madeira, with the expertise, the history of going through cycles, but with that forward-looking mindset of, look, the market's going to change and evolve, so let's lean into it. Let's not avoid it. I think that's absolutely critical for investors to have. Keeps the experts in their corner, right? That's what
exactly. Yeah, that's the thing. Madeira is, you look at Madeira today, and we do a number of different things. We're even a technology company, but we're all multifamily. Like that's our gig. If I was sitting up here talking to you about industrial or about commercial or something, like if we get into that, that's not who we are. Our identity is around multifamily, and there are great groups that do those other asset classes, and each one brings its own like unique reason why someone should be interested in their investment, putting this in their portfolio. And I love these opportunities to be able to talk, because I don't think people look at it that way. I don't think people understand, like it's complicated, but if you partner, you can really find some amazing opportunities to grow your wealth and turn this into something that does become generational.
Yeah, that's great. Like that's really good. Well, Dave, I know we're kind of coming up on our time today, but I really want to thank you again for joining us. I mean, this was incredibly valuable insights. I always love our conversations anyway, but I know our listeners are going to get a lot from this and insights and so forth. And to our listeners, thank you all for submitting questions. We always love hearing from you, and we appreciate you being part of the conversation. Dave, before we wrap up, where can people connect with you and learn more about Madeira?
Yeah, so MadeiraResidential.com would be the place to go from a website standpoint. One person I would say, if you have any interest in real estate, I'd start following a guy named Jay Parsons, either on LinkedIn or on social media channels. Jay is a Madeira guy, but he's been the chief economist for RealPage, one of the largest technology companies in our space. The great thing about Jay is he takes very complicated conversations about real estate. He synthesizes them down into something that makes sense to a layman. And so, I would say follow me on LinkedIn would be another good way of staying connected. And please, anybody who has any interest, please feel free to reach out.
Yeah, that's great. Well, and so all the listeners, be sure to check out Madeira Residential. If you're interested in learning more about tech-enabled real estate, how they're changing the multifamily game. And again, Dave, really appreciate your time today. I'll put this quote in at the end. Hopefully at some point in the near future, maybe sooner, we'll be having that conversation about crypto and the digital assets, smart contract space, and how it works in real estate. I think that would be amazing to dive more into that, but hopefully a conversation for another day. So thank you again for joining us for this episode of Pocket Pundits. Until then, take care and see you next time.